Hi, everybody. This is Tom Grisak with the Grisak Group. We're a real estate company here located in Allen. We're under the Keller Williams umbrella, and we do these quarterly reports. This will be for the third quarter, so we're a little bit late getting it out. But I'm here with Sean Elliott, our team leader, and Nathan Pugh, one of our great agents. So we're going to give you just a quick summary of what's happening. We could give you stats until your eyes start glazing over, but we're going to try to keep it to the real important stuff that people are interested in. So, Sean, take it away.
Yeah, thank you, Tom. Welcome, everybody. Like Tom said, this is data that compares the third quarter of 2024 to the third quarter of 2025, just so we can look at the market trends and see what the market's doing. And yeah, we could spend hours and hours going through slides, but we'll hit the big points. And then if you have any questions, follow up stuff after the fact, feel free to hit us up. We'd love to talk with you about it. So the first one we're looking at is just the market share over the third quarter in the DFW area, and Keller Williams has about 10% of the market of everything that closed in the third quarter. Almost 10% of those sales were with a Keller Williams agent, which just speaks to why we're here. I mean, I know people ask you all the time, like, why are you with KW? I thought you were your own thing. And the reason we're with KW is they're just one of the best real estate brokers on planet Earth. And so just this morning, I was in a training for how people are using social media right now, some of the top agents to help promote their listings, find buyers. So there's always different educational things. We have these tools that show us, market data in a very unique way. So just a great brokerage. And I do have a question for y'all. So 9.7%, obviously on this chart, it's a big market share, but I was like, man, that's not that huge. What do you think the market share of the iPhone is?
I couldn't even guess.
Take one. What do you think? All smartphones. How many are iPhones?
50%?
I think, yeah.
That's kind of what I was thinking too. I'm like,
Yeah.
man, iPhones are everywhere. Like, I've only been an iPhone guy. Like, they must have half the market, whatever. It's between 15 and 20%.
Really?
That's all.
That's it.
So, worldwide?
Worldwide.
Yeah.
Yeah.
Wow.
Of all smartphones, 15 to 20%. So just when you put in that context, like even a monster like Apple,
Right.
they only have around 20% of the market in a good year. Keller Williams has 10% of the market in DFW sales. That's a big number.
That is a big
That's
number.
a big part of market.
Yeah.
All right. Next one. This one we show every time. I'm not going to go too in depth, but basically the scary gray bars are the ones that have concerned us the last couple of years. That just shows months of inventory. And as you can see, if you look at this over the past decade, well, 15 years actually, we've just never had more inventory. There's just so many homes on the market. The red bars, they're showing the sales. So it's been very consistent. DFW is going to sell the same number of homes this year as it did last, very close to it, but it just feels a lot slower because there's so many homes on the ground. The only other thing here is that blue line that shows interest rates. That's the good news. It's definitely on a downward trend. We hit 7%, crossed that over the past couple of years, and now we're down closer to 6. I think most mortgages right now, you're getting 6 1/8, something like that.
Right.
Somewhere in that range. So, we're filming this one day after the Fed just made another rate cut. They dropped a quarter basis point yesterday. And I know a lot of people think, oh, let's wait for the Fed to make an announcement. Rates are going to drop, but that's not really how it works.
Right. Yeah, most of the time those mortgage brokers have built in and kind of baked in those expected rate cuts. They have all these forecasts, and based on what, the Fed is saying in the weeks leading up to it, they're kind of baking that in. And then when the actual rate cut comes, if it's not exactly what they forecasted, like they forecasted 50% chance that there would be a 25-point rate cut, and then he has a 25-point rate cut, but his comments afterwards is, we're not so sure we're going to cut like we said we were, then, the actual effect of mortgage rate applications is even a little higher. But so the rate cut was exactly what they forecasted, and then his outlook for the next one.
Yeah, and I mean, those mortgage lenders that are doing those calculations, they're looking at everything. They're looking at jobs reports. They're looking at CPI numbers. I mean, it's not just the Fed meeting that they're basing that on. So those calculations go in weeks in advance. So all the people out there thinking, I'll wait for the next Fed meeting before I buy, just know that that stuff is already cooked in well ahead of those meetings. Next one. So these ones that we're showing you, this is across all of Dallas, and then we'll get into some counties after that. So the numbers you're seeing, it's just across the greater DFW area. So this is just the change in active listings. And as you can see, it's up in every pricing category. I mean, if you look at the total, we're basically up 20% in inventory compared to this time last year, which goes along with exactly what we've noticed. There's just a lot of homes out there. So then the question is, are they selling? And this is really telling to me. Like, what do you notice based on that one?
Right.
What are people buying?
Yeah, they're definitely buying that lower range.
They're,
Right?
yep. Homes are still selling, right? Like we see that the number of total sales, it's still about what it was last year, actually up a little bit. But the properties that people are buying now are the more affordable ones, right? That's what they can get into. And so when you look at the upper end homes, when you're up over 600,000, up over $1 million, like those number of homes that went under contract during the third quarter, considerably down, right? But the ones that went under contract, they're huge increases once you're under, what is that, under 350?
Under 350, right?
Yeah.
And I think that's probably impacted by a lot of the new builds that have been coming up around the area.
That too.
They're offering rate cuts and incentives for buyers to move in that range.
Yeah, and this is interesting. I was actually sending some Lovejoy numbers, Tom, to a couple people the other day, just looking at MLS data, so it's not scrubbed like this. When you run acreage properties in Lovejoy, this year the average price point was up 11% compared to last year. But when you actually look at the data, there were like 3 massive sales. There was that big land sale on Woodmore for like 4.8. There were a couple 2.5 millions. And so all the data got skewed that direction. So again, when you look at this number, this data, these numbers, you got to really like look inside of it, because really across the board, we have seen prices stay level or come down a little bit. But the reason that the prices have come down in a lot of cases is this right here. It's just people are buying less expensive homes. Next one. So same thing. These are the ones that actually sold during the third quarter, not the ones that went pending. And so same thing, you see a big jump in the lower price homes, but you also see a jump in the $1 million plus over this quarter. So there were more luxury properties that actually closed third quarter this year as compared to last. All right. The one that our sellers don't want to see.
Right.
So this is showing what sellers actually received compared to what they originally started at. And, during the height of the market, this was darn near 99%, 101%, whatever. Like basically whatever you asked, somebody was going to buy it. That has changed. Those days are gone. So, or at least for a while, we'll see. But this year, you'll notice in every single category, right? Yeah, every single one on this chart, the percentage of the final sales price compared to what they originally were asking did drop from a year ago. So in total, I mean, if you look at everything across the board, most sellers are getting 95% of what they're asking. When you're in the $1 million plus range, you're usually getting about 93% of what you're asking. So again, that initial pricing is incredibly important. And Tom, you've always said this pricing is the hardest thing we do, but man, it is so important now to get it right. Days on market for the homes that sold in the third quarter this year, up in every category, up above 50 days in most cases.
Yeah, both those charts kind of go along with the additional inventory that we saw in that very first chart, right? You got so much more inventory. Now the buyers have more to choose from. And like you said, that really, with this softening, it's not necessarily, it's a softening of the market value, but it's also the available inventory.
Yeah.
And I think it's somewhat coming back to like the pre-pandemic, mania that we had there, where some people were kind of settling back down after the rush.
It's funny you say that, dude. We get people asking all the time, how's the market? How's the market? It's like, well, compared to what?
Right.
Like, if we're comparing this to 2008, it's fantastic. It's wonderful. It couldn't be better. If you're comparing it to 2021, it just feels slower. Like this is much more normal. This is stable. It's balanced. It's really the way the market should be.
Right.
Yeah. And you're right. Looking at that first chart, when you see that huge number of inventory versus what's sold, I can almost tell you what every single slide is going to be. They're all going to be like this.
Sure.
Yeah. Pretty obvious data. Number of homes that had to do a price reduction before they actually sold, more than half in every single category. And that's up across the board from last year. All right. This one, to me, is one of the most important. This is showing that if you didn't have to do a price reduction, how much you sold your home for compared to what you were asking. Those are the red lines. And so if you didn't have to take a price reduction, if you hit the nail on the head right off the bat and you were realistic and you said, hey, man, this is not the year to have some pie in the sky number. Let's go ahead and put it out there. In most cases, you got about 99% of what you're asking. If you didn't, if you overshot the market and you were just hoping for that home run number, the number drops to 91%.
Wow.
That's a huge drop.
Yeah.
That's a huge drop. So if you're thinking you want to tack on an extra 50, 70, 100K to your home because, you know, you think your home is better than everybody else in the neighborhood, which we've heard once or twice. But it's just, the data's not there for it. I mean, you just got to price according to the market. If you are, you know, you and your neighbor are on the market and your home is nicer, you put in these upgrades, whatever, that's great. But that doesn't mean somebody's going to pay an extra $80,000 for it. Now, if you know, price maybe 10 grand over them or whatever, or 20 grand, whatever, you know, the market data says, yeah, you're going to be the one that gets chosen, but you can't expect them to pay, you know, way over what the market's telling you.
Yeah, trying to hit a home run in a market like this, it's not going to happen. You have to be realistic. You have to pay attention to what the sales are, and you have to price accordingly without question.
Yep.
Yeah, and the other piece of that is also the presentation, the staging, the crisp presentation that you put on it as well. So
It's got to stand out.
Yep. And actually, Jason, we'll skip this one. This shows the same stuff. We'll go to 22. And we'd all assume this would be the case too, right? I mean, if you didn't have to have a price drop, the number of days on market was 2 weeks.
Right.
You found your buyer. And if you didn't, if you didn't hit in the first couple of weeks and you were just sitting there, you were old news, you had to drop price again. Now people think, oh man, they're getting desperate. Let me wait out the next price drop. Those days on market, they're, 3 months in most cases. 24, total failed listings. So the homes that didn't even sell, even though they tried, up in every category. Then that million one stands out to me a bit. So half of the $1 million homes essentially just fell off market without selling.
Yeah.
That's tough.
That's a big chunk.
That's a big chunk. Next, 27. All right, number of homes that got 100% of what they were asking or more, down in every category. So it was around 20% of the market. So around 2 out of every 10 homes got what they were asking or better. 31. This kind of shows what we've already said, right? I mean, right here, 100% of what you were asking happens in the first 9-10 days,
right, essentially.
So, Tom, we always tell people, when's the best day to put your home on the market?
It's when you're ready to sell.
Well, yeah, that. But in terms of, do you put it on a Tuesday?
No.
I wouldn't. What day do we like putting them out there?
Thursday night.
Because in that first 10 days, you get 2 weekends, right? You pop up in those search engines as a new property for 10 days. You're gonna come up in people's feeds. People want to go see that new home. So list that home on a Thursday. Get a little bit of momentum before that first weekend, and try and lock it down in those first 2 weekends. Is what this one tells me. Because if not, trend's going down.
What do you say to people sellers that say, "Well, I'm going to wait till the spring, and we're going to have a slowdown now for another couple of months"? Is it, people are always moving in to the Metroplex, always. What's the advantage or disadvantage of putting it on the market now?
Is that to him or me?
Both.
Jump, whatever, man. Jump on it. I mean, I know my answer.
Well, let's hear your
So it's all going to come down to the personal situation. There are some people that they just don't want their home on the market over the holidays, and that's fair. I get it. But when you come right now, if your home's on the market, you're one of fewer options, right? And the people that are going to buy a home this time of year, it's probably an immediate need. Like, hey, I got to get in by a certain point. I got to be in by semester, whatever. So the buyers, even though there's fewer of them out there, they're usually more motivated, ready to go, and you're one of fewer options. So there's some advantages to that. And if you wait until the spring, now, yes, there's more buyers out there, but there's also more homes. So the number of options go up. It's like those two things just go in tandem, right? Sure. One goes up, the other goes up, one goes down. So it really just comes down to personal choice. But for the people that are waiting until the spring, I know a lot of people think, oh, I'll list in May or whatever. I wouldn't wait that long.
Mm-hmm.
I
Yeah.
feel like it really gets cooking in early March.
Yeah. Right.
And what we're able to advise them on is what we can see now, what we can tell them about now. And there's
Right.
some uncertainty about, the seasonality is going to be there.
Right.
But how is this softening or how is this price adjustment going to continue?
Yep. I agree.
And there's uncertainty. I mean, nobody knows what 6 months from now looks like.
Right.
Anything could happen.
Right.
I mean, in 2020, the world turned upside down overnight.
Right.
You never know.
At the beginning of this year, we were expecting tariffs to block things down. And now
Oh.
look at the trade deals, right?
The world was going to end with
Right.
tariffs, man.
Right.
Yeah.
Our grocery bills are going to skyrocket. Right.
Yeah. You just never know. I always tell people, I can tell you what the market did yesterday. I can tell you what it's doing today. It's anybody's guess tomorrow.
Right.
I mean, we can look at these trends, we can look at historical data, and we can predict, obviously, better than most, but nobody knows. So you were talking about new sales, new construction. This just shows kind of the trend over the past couple of years. New construction obviously dipped in 2021 when COVID shut builders down quite a bit, but they've recovered quite a bit. And so now new builds are about 22% of the market.
Yeah, and they always lag behind too, right? This number will lag because, like in 2020, when it was shut down, you see the 2021 is where
Correct.
that lowest number is, and
Yep.
to where now we're getting much higher. To
Mhm. Yep,
because
absolutely.
they've been basing off the prices when they bought the land, and by the time they got it built and sold.
Yep. This one, I don't normally show this slide, but it was super interesting to me. So this is showing the median sales price for new homes versus resale. And that gray line is the new homes. It's actually under
Wow.
resale now. Jason, I know you study a bunch of new builds. Why is that? Oh, you don't have a mic.
Yeah.
We can edit that part.
I
No,
think
Jay.
builders are taking building at a
Yeah.
We're seeing a lot of people building.
Mm-hmm.
I think that's waiting for interest rates so they can get better buy downs to get more. That would be
Yeah. I agree with that. And we can put your text at the bottom of that section because I can't repeat all of it. But I think honestly, like when COVID cleared and they started building again, and we were in the market that we were in, where houses were selling immediately, right? Whatever sticker price you want, I'm going to buy it. They're like, all right, let's build a ton of homes, man. And then market softened. And now they've got all this inventory that hasn't moved yet.
Right.
And there's more building going on. And so now it's like, well, shoot, we're not getting the price we thought for this. We got to sell them. So now they're giving huge incentives.
Right.
Here's $50K off the price. Here's a 5% rate. Here's whatever. And so I was just super interesting to me to see that, actually the median sales price of new builds right now is lower than resale. Crazy.
Yeah, several new builds that I've dealt with lately have included, rate buy downs, washer, dryer, fridge, blinds, things that you wouldn't see.
We'll give you a bed. We'll give you a jacuzzi.
Right, bring your toothbrush and get ready.
All right, this one, we're on 62, Jason. Just the cumulative sales, looking throughout the year. Again, we're going to sell more homes this year than last. It looks like, we're a little above the trend line for the last couple of years. It's been pretty steady, but we should finish the year somewhere in the neighborhood of 80,000 sales. A lot of people. 63. So the months of sales, not surprising. I mean, we all know that, the height of the market is usually March through June-ish. But we do notice it, and you say this all the time, Tom. Look at that last little segment. The very end of the year, it spikes up.
Yep. And I don't have a reason that happens, but every year it seems like our fourth quarter is strong, and some very expensive homes sell in the fourth quarter. But I don't know what's causing that, even to this day. Any ideas?
I think it's what we just talked about. The buyers out there right now have a need, rather than just kind of a general desire. It's like, man, I got to be there by this time, whatever. And there's fewer homes to go around. So I feel the same thing. We do see a spike in end of year sales. And so we're hoping the same thing this year. I mean, we'll see, but we've seen it the last couple of years.
Still got 2 months.
Still got 2 months.
Yeah.
Well, really 30 days. We got 30 days to put stuff under contract?
Yeah.
Got to go, man. Got to go. All right. A couple more on this one. So the change in median sales price, man, 2020 to 2022 was fun, wasn't it?
Boy.
Those prices jumped like crazy.
Wow.
And then it balanced out, dropped a little bit, balanced out, went up a little bit, and now we're down about 2% for median sales price. So again, it's not like things have fallen off of a cliff. I mean, it's not like if you bought a home, a couple years ago, your value has necessarily dropped considerably. It just hasn't risen the way
hasn't
that
continued to
that
appreciate.
yeah. Normally in DFW, we see that line. If you look over at 2019, 3% growth and equity, 4%, whatever. That's pretty typical. So now that we went through that explosion and things have leveled out, hopefully we're returned to that where you're going to see about 3 to 4% growth every year.
Yeah, we're starting to see that the strategy is more important than the speed when you're selling your home or when you're out there buying.
No doubt. All right, last one on this one, Jason, 90. I don't even know why I threw this one in here. We normally don't go this deep into it. Oh, that's why. So distress sales. A lot of people ask, is this another 2008? Are we going to see foreclosures and short sales like skyrocket as people are falling behind on their mortgage? It is up. It is higher compared to last year, but it's still less than 1% of sales out there.
Right.
So, I mean, I don't know if y'all have felt this at all. I don't feel it. I mean, we're about to sell a foreclosure home right now in Fairview. So, I mean, they're there. We have them occasionally, but I don't feel like this is
In our area,
big problem.
it's pretty rare.
It is. But I don't see a trend that concerns me really either. I mean, if that number keeps going up, if we're having the same conversation next year and we see it up, above 1%, 1.5%, maybe there's something to be said about it. But right now, I'm not really concerned about it. All right, Jason. Moving over to detached. Where did I start? 5. Oh, we already did that one. Go to 7 on detached. So this is breaking it down a little bit more by county. And so this is the change in number of sales this third quarter of this year compared to last year. So most counties did pretty well. We're in Collin County, so there are 9.5% more homes that sold this quarter compared to a year ago. So people are still buying.
Well, twice as much as any other county there, huh?
Yeah. Well, Collin County, I wish I had the number memorized, but we just heard it too. How many people are moving to Collin County every day?
Oh,
it's a lot.
yeah.
It's a lot. It's huge. Like Collin County right now is like 1.2, $1.3 million residents, and I think I was reading that it's going to be up to 2 million by like 2035, something like that. We're going to almost double in population. It's crazy. It's crazy.
Yeah. Every time you get one of those roads going out towards, somewhere you haven't been in a while, and it looks completely different.
Where Jason just bought a house.
Yeah.
And it takes him twice as long to get to work than he thought.
Right. Yeah, I just went. My wife and I drove to Farmersville because there's a big nursery, out there. She wanted to get some flowers, and then we're driving down there. It hasn't been that long since I've been down that road, and there's a brand new storage building. There's new apartments. There's new subdivisions coming up all the way down
In Farmersville.
all the way from Princeton. Yeah, it started in Princeton.
Yeah, it's crazy, dude. All right, median days on market by county. No surprise. Grayson is taking the longest right now.
I wonder if that's where some of those new builds had spread up to that area, the very
Could be.
north of Collin County,
Could
into
be.
Grayson.
Yep.
And now that's slowing down.
All right. Change in median days on market. I'm sorry. We're on 12. So median sales price to what they were originally asking. Collin County's kind of low on this one. But really, when you look at the numbers, they're all around 94% though. So what did the best? Johnson County at 95%. No, sorry, Tarrant County. It's out by Fort Worth. They were getting 96% of what they were asking, whereas Collin County was at 94%. I mean, again, it's all relative. It's all in the same area, but we did 113. Change in price. Percentage of sales to original list price, so down across the board. Even though some counties did well, they sold more homes. The days on market may have been more or less whatever. Across the board, prices went down. Median sales price. Going to 24. And we're almost there, wrapping it up. Months of supply. So this number actually has changed over the years. Like it used to be, I think the number was if it was less than 6 months of inventory, it was a seller's market. We've kind of changed that a little bit. We're like if months of inventory is under 4, really things are more in favor of the seller. We call it a seller's market. But if that inventory is between 4 and 6, we're really calling it more of a balanced market now. And then if you get over 6, it's more of a buyer's market. So this goes along with what we said with Grayson, right? Grayson, it's pretty much a buyer's market right now. They hold the cards. Same thing, and that's kind of surprising that Rockwall is getting out there. Rockwall has about 6 months of inventory. Again, probably new builds.
Yeah.
But Collin County, it's still technically that number. I'd still call it a seller's market. I don't want people to take that and think, oh, I can do what I want, because you can't. You got to be strategic about it. But it is still a seller's market. But it's good to see that. We like it seeing it in the green. 29, excuse me, as I choke on myself.
It's going to be a tough slide.
Might have to zoom in a little bit on this. This is just by city, like the major cities that are kind of in North Dallas. And so Allen fell back quite a bit this year, 10% fewer sales. A lot of green on the board. And Tom, I know we always like talking Fairview Lucas Parker. What was that number? So Fairview Lucas Parker, total sales were down 2%. So we sold around the same number of homes Q3 of this year compared to last, just down a little bit. Which ones really jumped? Rockwall. Sales were up 32%, which is weird because their inventory is so high. Well, I guess it makes sense. If you have that much inventory, there's a lot to sell. Yeah. And people do love Rockwall Heath. I mean, it's a beautiful area. So mixed bag there. 31. The median sales price by area, Allen dropped about 4 points. Fairview Lucas Parker dropped about 4 percentage points. And again, like I said at the very beginning, that doesn't mean that every home has dropped in value by 4%. It means that the homes that sold in that area, they were usually the lower price homes. You know, instead of selling a bunch of $1.8 million homes, we sold a bunch of $1.2 million homes, things like that. So the data, you know, you got to look inside of it a little bit.
You see that Van Alstyne area, that's that Grayson County. So that lines up too with where they're
Which
dropping
one?
those prices.
Oh, yeah. Yep. And all the green in there, it looks like it's Dallas stuff, right? Preston Hollow, downtown Dallas, Highland Park. I mean, those values are nuts. Location, brother. Change in median days on market, red pretty much everywhere. Everything's taking longer to sell, except for Red Oak and Van Alstyne. Van Alstyne is moving quicker. Also a beautiful area. Okay, last one, Jason, to the luxury stuff. So now we're looking at over 700, but then we have other pricing tiers like 1 to 1.5 million, 1.5 to 2 million, $2 million plus, whatever. So the number of homes that went under contract in the third quarter down in the lower price points, but actually the higher end stuff, the super luxury, 2 million and up, more homes went under contract this year compared to last. 1.5 to 2 million was up 33%. It's a big jump. But in that, and we've talked about this a lot, the people that are buying a $2 million home, do you think they care about a 6.25% interest rate? Not nearly as much.
Not nearly as much.
They care about the stock market being at 48,000.
Yeah, right.
You think of the number of homes in our area that are coming available now. You know, most of them are coming available in this higher tiers of their homes. I mean, we were looking at some of the new developments that's come out by J. Anthony, and then that one new one off Blondie June that you were doing the video of the other day. 40-something lots coming up. Seems like they're only adding new in this category.
Well, there's a market for it, man. I mean, DFW is a very affluent place, and as we see things change around the country, like, I mean, we've had a lot of people flee here from California. We're probably going to have people fleeing here from New York. I mean, those are high net worth people that are not going to be looking for a $500,000 home.
Right.
Yeah, in most cases. And so this was the closed sales in the third quarter of this year, up across the board, every category. So more luxury homes sold this year, or this time of this year compared to Q3 of last year. And then the last one, the median price they were getting compared to what they asked. So as you'd expect, it's going to be kind of similar. This was down as well. So, you know, somebody asked 2.5 and ended up getting 2.35 or something like that. I mean, there had to be a little bit of wiggle room in there, but still, for a $2 million property, I mean, getting around 92% of what you're asking, probably not what people want to hear, but that's what the market is doing. So that trend's pretty similar as well. So that's it, man.
Good job.
A lot of data.
What people have to remember is all real estate is local, and you could be hyper local and be talking about Fairview, Lucas, and Parker, and that's totally different from other areas. So this is just it's normal. This is what keeps our real estate in balance, is by having these cycles. This is always if you're committed to an area, there really is no perfect time to buy. You're never going to hit it perfectly where prices are at the very lowest. If you're selling at the prices are at the highest, you just have to make a move when you're ready. Waiting on interest rates to get to a certain point, sure, you can do that, but no one can predict that when that's going to happen. We're at a good interest rate right now. It may seem high, but historically, 6 to 7% is considered average.
Yeah,
So,
and you got to consider if you're waiting for rates to drop, and let's say they do get to 5 3/4, whatever, there's a million other people doing the same thing. So then the number of people going to get that home increases.
Right.
So demand goes up. So
Right.
if supply is the same, then prices go up. They all change together.
yeah.
Yeah.
So thank you guys. Great job. And
Thank you, Nathan.
Yeah.
Thanks for sitting in, brother.
Thank you.
Good to
This was
have you.
fun.
we'll see how this all shapes up at the end of the year on our fourth quarter report. And we're positive about the market. We've got homes that are sitting there that we're not used to. They would have sold by now. But at the same time, we're getting more than our share of sales. So,
So thank you to our clients.
yeah, for sticking with us. Yeah, that's
Yeah.
why we do these, because we want people to know it's just not necessarily their home.
Yeah.
This is a sign of the market.
Yep, absolutely.
Thank you, guys.
Thanks a lot.